everybody, it's Jimmy and Bill. So today we have an interesting one. Do you know that 2/3 of the people are hoping for a recession just to get better pricing on homes? They think that if the recession is going to hit, that they'll get better deals on houses and it'll be beneficial to them. So we're going to talk about that, and we got two other really, really interesting articles. So watch the whole video because I think you guys will be interested in this one. And do me a favor, if you guys like this kind of videos, subscribe, hit the bell notification, and give this video a thumbs up. It really helps the algorithm, and it really helps our channel. All right, let's get started. All right. So basically, with mortgage prices still high, many potential buyers are sitting on the sidelines until their prospects improve. What do you think of that one? You think a lot of people are sitting on the sideline?
Yeah, it makes sense. I get it. It's affordability is at an all-time low, so that makes perfect sense. Waiting for things stabilize, and then obviously, like we've talked about before, going into something that's more stable makes everybody feel more comfortable.
Yeah.
Good or bad, up and downs.
So I agree. I think there's a lot of people on the sidelines waiting. Mm-hmm. The situation has become so unstable that 64% say they wouldn't even mind a recession. 64%. That's what if helped to better afford a home by lowering mortgage rates, according to Credit Karma. So they're saying that in a recession, the feds are going to lower rates to help get out of this recession. And what we're going to talk about today is why that may not be true during a recession.
Right, and there's a lot more to unpack when it comes to a recession. That doesn't necessarily mean your rates are going to come down, or that if the rates do come down, a recession could mean job layoffs, reduction in hours. There's a lot of different things that could happen that you really have to think about.
Oh, absolutely.
Because you might not be able to afford that house now. Or maybe if you had a second job or an additional pairing of income, now you can't afford that, because you lost that additional income, or just there's so much involved with that. That's a dangerous game, in my opinion.
Go ahead, Bill. Read more of it.
All right. Roughly 82% of respondents in the Credit Karma survey conducted by the Harris poll say the country is grappling with an unprecedented housing affordability crisis, and another 3 in 5 who've never bought a home don't think they'll ever be able to do so.
Really? That many people don't think they could buy a home, huh?
3 in 5 kind of gives some light to the true, American dream aspect of things again. And that's kind of sad that people, feel that way.
I know, 3 in 5, it seems like a lot of people.
That seems high.
Yeah, it seems high, but I have talked to people that feel that they can never buy a home.
Right, because let's think about it. When I know we've talked about this before, where people are trying to save up money, but for their down payment or what have you, and the home prices just keep going up and up and up and up.
So they couldn't save fast enough to keep up with inflation. So it's like they're not even saving, because if they saved $20,000, the price of the house went up $25,000.
Right, and that's kind of maybe an extreme case, but even not just necessarily inflation, but just the normal equity gain that you have year over year on homes can sometimes eat up some of that savings, because it's things are tight sometimes, especially now.
Yeah. I mean, right now it says, here's a point. National Association of Realtors expect house prices to rise 2.6% in 2024.
Right, and I would expect the same. That makes complete and total sense. So if you look back before we had these massive, massive increases, our average bounced right around that, 2.5% to 5%, home equity gains year over year, obviously prior to the pandemic.
Yeah, so basically it continues on saying there's simply not enough homes for sale, according to Loris Young, NAR chief economist, said this summer. Mm-hmm. The market can easily absorb double the inventory. What do you think of that one?
Now, I agree that we do have a low inventory for multiple reasons. You know, we haven't built on a national level, we haven't built to the level that we need to for all the people that are able to purchase homes. We've got the potential lock-in, you know, with the rates being low
Yeah.
for people that refied and like their house. So those aren't necessarily getting turned over, you know, and recycled into another home per se. That doesn't necessarily, if you kind of think about that, that doesn't necessarily fix it, because usually they're putting one on the market and taking one off the market.
Right.
You know, so
That
it's
makes
kind of a
sense.
wash.
Yeah. All right, let's see what else they say. That said, Young believes that the meaningful decline in mortgage rates could still lead more buyers, and NAR forecasts existing home sales to climb 15.5% next year. So they think sales are going to go up 15.5%?
It's not that much, really. You know, if you think about it.
Yeah, but you watch all these YouTube videos and other people saying, and they're saying the opposite, is going to go down 15%. I mean, who do you believe?
I guess you just have to, everybody's got their opinion, let's just say that. Everybody's got their opinion.
All right, what's your opinion? You think...
Well, we always try to base our opinions on facts,
Okay.
not just, you know, for clicks and things. We try to be as honest as possible with the information we have at hand at the time. I think that for the fact that the Fed is not being as bullish with their statements about getting inflation under control and raising up the interest rates and things like that, that the Fed actually said that they're going to do potentially 3 small rate decreases. Now it's this year in 2024, little by little, as long as things don't get out of control. Those are the things that I see that, okay, now we're starting to slide down. We're starting to get back to stability. And I think those things are going to drive more sales.
Yeah, I agree with that. All right, so let's continue. It's also crucial to keep in mind during a recession, employment typically goes through a slump as well. In that case, you can expect more layoffs, more pay cuts, which could mean some hopeful buyers might not be able to afford a home or even secure a mortgage. That's pretty true.
Yeah, that's true. It kind of goes back to the 62-ish% of respondents in that one poll kind of hoped for a recession to
Yeah, but what if
reduce
they
the
don't have a
rates.
job?
Right, but that's kind of what we were saying. Like, that's great, but you kind of have to be careful what you wish for, and that comes with consequences as well. Job layoffs, maybe that second job that you had, they're cutting back on things.
Yeah.
It's happening in other places around the country as well. Business owners are cutting back because of inflation, the increase in minimum wage, all that stuff. That's causing some cutbacks.
Yeah. Some buyers are getting creative. According to a survey, nearly 2 in 5 people say they'd be willing to take a side gig or restrict and stop spending on non-essential purchases if it would improve their chances of buying a home.
Good. Yeah, that's what you have to do. If you want a home, or if you want, it just doesn't apply to a house or a home, that's everything. If you want something, then maybe you have to save for it, and that extra coffee or extra whatever it is that you were gonna do, you do it that month or for a while.
Yeah. If you are even willing to move in with their family and friends for the time being to build up savings and putting important life events like getting married or having kids on hold. We did a video on that one, about kids.
Yep.
And people are having less and less kids and how that could impact. But it's true. People are thinking twice about having kids.
Yeah.
Just because they can't afford a house.
Right, well, just because they can't afford stuff, period. It's like pets, children, vacations, all that stuff's expensive. And things like pets and children aren't necessarily, they're not short-term expenses. Those you're there for the long haul, and the people are taking that a little bit more to heart maybe earlier in their life, who knows, I don't know. But they're definitely take that into consideration.
All right, here's another article that's interesting too. A shocking 40% of students, loan borrowers, missed their first payment after the pandemic era freeze expired. So basically 40% of students missed their first payment.
That doesn't surprise me, though, to be honest.
Go ahead. Explain that one.
My kooky theory, that doesn't surprise me. They went so long without having to make a payment that they didn't even realize that they had to make the payment.
Yeah, but you figured they got a letter or an email or something.
Yeah, but you know.
Here's what they say. According around 8.8 million of 22 million borrowers who missed October payment have failed to make their payment by mid-November, a sharp contrast to October 2019, pre-pandemic levels, when 26% of the borrowers still high missed their payments, Political reports. So basically, it went from 26% before the pandemic, missing your payments, to 40%.
They're just their first payment, or was that?
First payment,
Yeah.
you know? In October, the number of Americans delinquent on subprime auto loans hit the highest rate on record. So basically, not only student loans, but car payments also.
That makes sense. We've talked about that before. We've seen those articles that come out that, you know, the super high car payments, the increase that, you know, cars have gone up in price in crazy amount. And then because of inflation, things got more and more expensive, and there's only so much money.
Yeah, so they're saying, so basically the rise in Google searches on give my car back
Oh my gosh.
increased dramatically. Well, the number of people who are upside down on auto loans is the highest level since April of 2020.
Wow.
Man, these cars could really get you in trouble.
Dang. I guess so.
Yeah, so the one that I'm still driving the same thing I'm driving.
Right?
So,
Well, I mean, just touching on that for a hot second. You know, these dealer fees and these additional charges that dealerships have.
and the interest rates.
I've never seen that when I mean, it's been a while since I've purchased a vehicle, but I just don't remember seeing all that extra
I met
stuff.
I met somebody recently, and they were excited. They got 14% on an auto loan. Well, 14.99. They still consider 14. I said it's 15.
Holy smokes.
You know.
Jeez.
So
Yeah.
I mean, that's crazy. All right, Bill. What's the next interesting article that we're going to talk about
All
today?
right. So this one's talking about mortgage rates. And it's titled, "This Magic Number for Mortgage Rates Will Thaw the Housing Market and Allow Prices to Drop," Double Line says.
So basically, the last video we did, I believe I said the magic number was 5%. And then
think so.
when I read this article, it confirmed that they think it's 5% too. Because I think if the market hits 5% mortgage rates for a 30-year conventional, I think things are going to blow up. What do you think?
Yeah, I mean, that brings us in the fives, brings us back to where we were pre-pandemic. So for me, that's just a sign and another number that gets us back to where we have some historical data that we can pull some information off of. And I think you're right. I think if we're getting into the fives, 5.7 and under, I think we're going to be in great shape.
So yeah, they're saying lower mortgage rates will bring home buyers back to the market, fueling inventory volumes. Agree, right?
Yep.
Okay. Others have said falling mortgage rates will lead to a surging demand to keep prices high. Talk about that
Well,
one.
that's true too. That's the supply and demand side of things. So if we have a lot of buyer activity and there's not as many homes, lower seller activity, then the demand will be up, and then that can make people, price higher, and it pushes us back more into a seller's market, as we're starting to slide up towards a more balanced market, but we still have a long way to go.
Sure. All right. However, it remains to be seen whether mortgage rates keep falling at a brisk pace. Most analysts expect the 30-year mortgage to hover in the 6 to 7% range throughout 24. I kind of agree with that.
I agree with that. We had this big drop recently,
Yeah.
and I'm just trying to make sure people understand that while that big drop was good because it was in our favor, because it was lower, it was still a dramatic drop,
Right.
right? And we don't really want that. We want those nice slow waves of consistency.
Right.
That's really what we're looking for.
I agree with that.
So, we may see another bump up, short term, or we could just kind of not see it really change and get back to that little wave again before we start seeing a bump down.
All right, so that's a good lead into our next article.
Okay.
3 signs the housing market is bouncing back. Affordability is improving.
Right, so interest rates stabilize at a lower rate, which will affect affordability, because you'll be able to afford more home. I really just don't see home equity itself sliding backwards in a majority of areas.
Okay.
I just don't see it. Historical data doesn't show it. Data that we have now doesn't really show it. And I just don't see it.
All right, let's see what they say in this article. Home affordability got clobbered this year, 2023. We're in 2024 now, but according to Redfin, only 16% of homes for sale in the U.S. were considered affordable. I believe that.
Yep, that's, yeah.
They had a monthly mortgage payment that amounted to no more than 30% of the area median income.
Okay.
That's the lowest share on record since Redfin started tracking the data 10 years ago. All right, let's continue. Now, falling rates are luring buyers back. At the October peak of 7.79%, the typical monthly payment on a $400,000 mortgage, excluding taxes, insurance, homeowners association fee, and other costs, was about $2,877.
Okay.
Seems pretty high, but at a current rate of 6.61%, the average mortgage payment is about $2,557, a savings of $320 a month. That's not bad, $320 a month.
That's a lot of money.
Yeah,
That's
times
a lot
it
of
by
money.
12.
Yeah, I mean, just thinking about that month to month, how much does the average wage earner, how many hours does that take, to earn? And it just, a little simple interest rate drop, even a very small interest rate drop, saves you several $100s a month.
Yeah, and if you're buying a really expensive house, that's a big savings.
That's even more, right? It's compounding. Now I think those numbers I don't think those are covering taxes and insurance and all the other.
No, it says excluding
applicables.
taxes, insurance, and HOA fees and other
principal.
costs. Just principal and interest.
Just principal and interest on there. Okay.
Yeah.
Yeah, so that's about right. All right, so the next topic was new listings are picking up. So lower interest rates are bringing sellers back too. According to Redfin's report, new listings are up 9% year over year, the largest annual increase since July of 2021, when the pandemic buying frenzy was in full force. This trend will likely accelerate as homeowners who bought a home during that period feel less trapped or locked into their 3 to 4% rate. People who bought a house more recently, that is, buyers who didn't win the interest rate lottery, will be even more willing to part with their property.
That's true. So right now, we had an inventory shortage because of people don't want to give up the 3 and 4s, but
Correct.
if interest rate's full.
Right, coming off of a 4% interest rate to go to maybe like a 5% interest rate is not hard of a pill to swallow as coming off of a 4% to go to an 8% interest rate. And again, people will buy and sell because of necessity, but I think that will help once we stabilize these interest rates to unlock some of those people who, you know what, I might just put up with whatever it is that bothers you about the house.
Yeah.
Because how much more is this other property going to cost us?
Right. So basically, mortgage applications are rebounding. Okay, that's true. I heard that. The number of mortgage application home buyers filed with lenders hit a 28-year low in October. It did. October was a horrible month.
Right, yeah, we're coming into the holidays.
Yeah.
Interest rates were crazy high.
According to the Mortgage Bankers Association, MBA, as rates started falling, those filings have slowly ticked up higher. Yes, I know a
makes
few
sense.
mortgage people,
Yeah.
and it ticked up. The pace of those applications is still pretty sluggish. Yeah. MBA says people are filing 18% fewer applications than they did in 2022.
Okay.
We're still not, we just got out of the holidays,
Right, well, and I mean, we started to see the interest rates go up in 2022 into 2023 is when they hit their peak. So that data makes perfect sense that everybody slowed down a little bit because they just flat out did.
Yeah.
You know, because interest rates are so high. So a lot of people, not only were people just not willing to pay, it's more that some people weren't qualifying for their mortgage at such a high interest rate because it put their debt to income ratio out of whack.
Yeah, that's true. That's true. Anyways, that's today's articles. You
Yeah.
have anything to add?
That's it. I just appreciate you watching.
Yeah,
And,
and do me a favor, subscribe. It really helps out the channel more than you'll ever realize how much it helps out. And comment below, and I reply to almost all the comments. Thank you, and have a great day. We'll speak to you in the next one.
talk to you soon.
Bye.
Thanks.